Hello folks, this is Rich Prout from Stonehearth Capital Management with an educational economic update for October 2016. In this month's video, we'll discuss some of the events that influenced markets in September and help you understand what they could mean for you as an investor. Please stay tuned at the end for a required disclosure statement. The third quarter ended in volatility for U.S. markets. After a sleepy summer with historically low volatility, markets became more turbulent in September. Let's talk about some of the headlines that drove market movements last month. The Federal Reserve was again the source of much speculation. The central bank met in September to vote on interest rate policy and decided not to raise interest rates again. The Fed is in a tough spot right now because it needs to bring rates higher to avoid overheating the economy. However, central bankers also need to be careful not to raise rates too soon or too fast, as they risk hurting the economic recovery. The economic data right now looks moderately good, but the Fed knows that there are risks on the horizon. What comes next? It's not likely that the Fed will raise rates at the November meeting when the presidential election is still a political factor. So that makes the December meeting very important. Wall Street thinks the odds of higher interest rates after December are over 60%. Interest rates have complex effects on the economy, corporate profits, markets, and consumer finances, which is why investors care about where interest rates are going. Overall, we can expect the Federal Reserve to be a source of market volatility through the end of the year. The third release of Q2 economic growth data shows that the economy grew 1.4% in the second quarter. While the growth is below trend, economists expect to see stronger growth return in the third quarter. Two unofficial projections of gross domestic product show that the economy may have grown 2.2% in Q3. However, forecasts have come down steadily in recent weeks, and it's possible official growth numbers could disappoint. What can investors expect in the coming weeks? Volatility and more volatility. Markets are grappling with a lot of uncertainty, especially ahead of the November election. We also know that the Federal Reserve wants to raise interest rates this year. On top of that are concerns about oil prices and Britain's exit from the European Union. Overall, we can expect markets to remain uncertain until these important questions are resolved. Once again, this is Rich Prout with Stonehearth Capital Management signing off for the month of October 2016. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 978-624-3000. We'd be happy to talk with you. Thank you.